Thanks for staying with us. This is Business Incorporated on Channels Television. I am Bisi Adebayo. Coming up, a new development bank set up by the BRICS group of emerging economies plans to lend $1.5 billion to South Africa for infrastructure projects. And a new research by the Economist Intelligence Unit projects Nigeria is in a position to hit $50 to $75 billion from Africa's e-commerce industry within the next 5 to 10 years. Plus, the International Monetary Fund forecasts real growth of 6.7% for the Guinean economy in 2017. Well, let's start from the markets here in Africa, where the indices are mostly in the red at intraday. The Nigerian All-Share Index is the only market in positive territory at intraday. The South African burst is down 0.5%. Egypt's index fell 0.2% on Thursday, and the Kenyan markets closed 0.43% lower also on Thursday. And most major stock markets in the Gulf rose on Thursday, with Saudi Arabia's index gaining strength from positive company-specific news, while shares of one of Egypt's property developers dropped as its quarterly earnings missed estimates. The Riyadh index added 0.7% as all 12 listed banks rose. Elsewhere, the Dubai index rose 0.3%, with activity dominated by Union Properties up 3.7% and GFH Financial up 2.8%. Qatar's index added 0.9%. And European stocks were sharply lower today as investors react to Spain's worst terror attack in more than 13 years. Europe's travel and leisure sector led the losses after the attack in Spain's second-largest city. Airlines, including EasyJet, Ryanair and Lufthansa, were all among the biggest fallers in morning deals, each down by more than 1.3%. DWTV Channels TV financial correspondent Orich Batts is at the Frankfurt Stock Exchange to tell us more about this today. Many thanks, Orich, for joining us. The deadly and appalling Barcelona terror attack is roiling the European markets today. Take us through how the Spanish market, the euro, and regional markets are holding out on this horrific event.
Yeah, this event is making its mark across Europe. Major markets are coming down. When you look at Germany, when you look at Spain, when you look at the Euro Stoxx 50, which mirrors the trend in the 19 Eurozone countries, they're all down. The DAX here for Germany has recovered a little bit from its low start into the day, but it's still in the red. When you look at individual shares, practically all travel and tourism shares are under pressure. The exception here is Lufthansa, which started down about 2% lower, quite a low mark. It's now in the green zone, that is, it's gaining, perhaps on speculation over Air Berlin, how much of it can take there, how profitable that might be. Some investors may be using the lower prices to jump back in there. But when you look at IAG, the airline holding group with British Airways and Iberia, among others, in the group, that's down. Air France KLM is down, as are the travel companies TUI and Thomas Cook. So it's a phenomenon all across the industry. The industry indices are losing more than other sectors, and safe havens like gold and bonds, they saw investor money coming in this Friday.
Now, across the Atlantic, Wall Street is facing its biggest two-week decline in about a year. Is this about the troubled Trump administration, the economic data earnings, or what?
Yeah, I think economic data is not responsible. The data that's come in has been overwhelmingly positive, or let's say less disappointing than people thought, and usually that's a positive for share prices. But what I'm hearing from traders is that it's mainly Donald Trump. The picture, it has just become more gloomy day by day. Home alone Donald Trump, that's what you could call it almost. He's being left by his economic advisors. There were rumors that his top economic advisors within the White House, Gary Cohn, formerly number 2 at Goldman Sachs, might also have enough and be leaving. He is, of course, speculated to be a possible candidate to replace Janet Yellen as the chair of the Fed, if he left early, that would be seen as a really serious sign for the markets. So you can hear that from Wall Street, and I think that sort of talk is casting a shadow. The way Donald Trump is behaving himself, and the fear that he's not going to be able to push through his business-friendly legislation, that's all weighing down on U.S. shares.
But despite the unpleasant headlines in the news as the week draws to a close, Orit, just before you go, give us some cheering news if there's any in the coming week.
I'd love to give you some cheering news. I don't know if I can. Perhaps sitting here in Germany, it's easiest to look at maybe something cheery coming from the German economy, because we have the IFO Business Climate Index coming in next week, and the last 2 months it reached a record high in July, already surprising investors. June, a record high. Is there another one in store? We don't know. The euro is higher. That's not that great. Doubts over the U.S. leadership may already be coming in, but that could provide us a pleasant surprise. Otherwise, a very important meeting to watch out for is Jackson Hole. That's the central bankers meeting in a super resort in the very picturesque Rocky Mountain setting in the state of Wyoming. And the central bankers there, among Mario Draghi, will be speaking about all matters of policy. There's not a lot of hope that Mario Draghi will be in any way more precise on when the ECB could maybe tighten monetary policy, but that's something to surely look out for next week.
Yes, indeed, Orit. It's been a great week with you. See you again next time. Moving on now, U.S. stock futures are up today, even though investors are staying cautious after yesterday's sell-off that was fueled in part by a terrorist attack in Barcelona and rumors that an economic advisor to President Donald Trump might resign. Futures for the Dow Jones Industrial Average are up 0.01%, while those for the S&P 500 index are 0.06% higher. Futures for the Nasdaq 100 are 0.27% up. In the meantime, Asian Pacific stock markets fell Friday, with Japan's Nikkei hitting a 3-month low, pressured by overnight weakness on Wall Street after days of solid gains. The Nikkei stock average dropped 1.2% after falling to its lowest level since May. There was added pressure from the advance of the yen against the dollar, but the Nikkei powered its loss, with analysts saying that strong corporate earnings were providing some support. Hong Kong's Hang Seng Index fell 1.1%, while Australia's S&P ASX 200 narrowed its loss to 0.6%. Korea's Kospi was off 0.1%. In China, the Shanghai Composite Index ended less than 1% higher.